everyone, welcome back to the Always Bookkeeping YouTube channel. My name is Alana, and today I'm going to be talking to Tony from Always Bookkeeping. Hi, Tony. How are you?
Good. How are you?
I'm great.
Good.
I'm really excited for today's topic.
Yeah, it's going to be a good one. Actually helping business owner how to read the financial statements and demystify them so that they can understand what they're looking at on a monthly basis.
Excellent. I'm so excited. So if you've ever looked at your financial statements and thought, what am I even looking at? You're not alone. Once you know how to read these statements, they can become a powerful tool to grow your business and stay in control. By the end of this video, you'll understand what the numbers actually mean, what to focus on as a business owner, and the mistakes that bookkeepers see clients make all the time. All right, Tony, let's dive in.
Okay.
Perfect. The first question I have is, what are financial statements and why should I care?
So that's a great place to start. Financial statements are basically the scorecard for your business on a specific time frame. So whether that would be on a monthly basis, quarterly basis, or your annual basis. So the financial statements show you how much money you make. So that's your revenue. That's a good place to categorize your revenue, whether that would be service revenue, product revenue, or more services that you offer for your business. And another one would be how much you spent. So that would be your direct costs and your indirect costs. So the direct cost would show you what your gross profit would be. Indirect costs together with your direct costs will show you what your net profit would be. And then on the balance sheet, it shows you what you own and what you owe. But the most important two financial statements that the business owner should look at on a regular basis, for this example, would be monthly basis, is the profit and loss, or your P&L, or another term for it would be the income statement. And another one would be your balance sheet.
All right. What does P&L stand for?
Profit and loss.
Excellent. And another question, what is direct cost and indirect cost?
So direct cost would be anything that costs you to provide certain services or certain products. So let's say, for example, I'm going to use an electrician as an example. So you want service costs would be how much labor, how many hours your journeyman need, how many hours as the business owner that you put into the project. And then another cost would be your product cost. So how much it costs you to buy the sockets, the lights, the cables. So those costs would be direct costs for you to perform the service and to finish the job. And then the indirect cost would be the expenses, kind of like overhead that you don't need to run the business. So let's say that would be rent for your admin employee, for your insurance, for your dues and subscription. That would be any software that you need to run the business, any meals and entertainment that you require to have to run the business, but doesn't necessarily directly produce the revenue.
Thanks so much for that explanation. I think that even demystifies that even still for me.
That's right.
My next question is, what is a profit and loss statement in simple terms?
So don't start by just looking at your expense line when you look at your profit and loss statement. So your first thing you want to see is the top line would be the revenue. So like I said, you want to look at your all the revenue stream that you have for your company. So that would be service revenue, product revenue, to differentiate what you want to focus on or what you want to spend the money on to better explore your revenue stream. So if your revenue is 80% service and 20% product, do you want to focus more on the service, or you want to spend your time to have the client buy more products from you? And then on a monthly basis, you want to look at the revenue level. So is this month better than last month? Is it consistent throughout the last 6 months? Is this consistent throughout the last 12 months? What is this month compared to the same month last year? And so on. And that would be the first thing you want to look at. So your revenue level. And then you want to look at your direct costs on the P&L. So that would be the second part of your P&L you want to look at is the how much it costs you for your senior journeyman, how much it costs you for your junior journeyman to be able to code the client. And the problem I see a lot of business owners have is their gross profit. So they have the revenue level, direct costs, and then the gross profit. They want to see if it's within the industry standard. So your revenue minus direct cost give you your gross profit. So that's the first thing you want to look at. And the second thing is if your gross profit is healthy, then you want to look at your expenses. And at that point, you want to see what, on a monthly basis, what expenses you want to cut. So for example, let's say there are subscriptions that you don't really need. You tried out 3 months ago, then you forgot about, but you're still paying for it. So I want to look at that. You want to see if the guys for your business are eating out more, if they are actually spending the time traveling from actually the office to the workplace, or they're making stops that you don't want them to, and they're paying for gas on their personal vehicle, like personal trips on the company card. So you want to keep track of all the expenses, what you can cut and what you want to explore more. Let's say you want to try out another software that would increase the productivity of the business. Then that's what we want to look at on a monthly basis to give you the net profit, and that would be at the bottom line after revenue minus direct cost minus indirect expenses to give you the net profit.
And you'll have that on a monthly basis for your clients.
That's right. So we want them to look at the P&L on a monthly basis. And another mistake that a client make for us usually is they would think the net profit at the bottom line is what the cash that they have in their pocket. But then that's not always true. Just because you make, let's say this month you make $10,000 on your net profit doesn't mean that you have $10,000 extra in your bank account. That's when we look at the balance sheet, and that's when we know for sure how your cash flow is performing.
So when I'm looking at my profit and loss statement, what should I look at first?
You want to look at your revenue. Second, you want to look at your direct costs. So how much it costs you to run the business, to create the revenue. And then you want to look at all your expenses from top to bottom. So most expensive item to the least expensive item, and then minus all that would give you the net profit.
All right. And will the profit and loss statement be organized from most to least expense?
That's right. So you want to look at the most expensive line. So usually that would be either dues and subscription, insurance, or auto expenses, whatever that is. If that looks like a normal level for your business and industry, then we'll look at that and identify if it's okay. If not, then we make changes to the expenses. And that's why it's good for us to look at the P&L on a monthly basis to identify the problem. If there are no problem, then we can just continue.
All right, Tony, now that I know what a profit and loss statement is, what's a balance sheet?
So, but the balance sheet is a snapshot of your business at a single point in time. So the formula for the balance sheet would be your liabilities plus your equity equal your assets. So when you look at the balance sheet, you want to know how much your company actually worth and if your cash flow is positive at the end of the month.
Can you break down the balance sheet in sections for me?
Yep. So the balance sheet, the first thing you're going to see on the balance sheet would be the cash. So that how much money you have in your checking account, how much money you have in your saving account, and how much money you have in your investing account. And the second thing you're going to see would be the liabilities. So that would be your credit cards, your loans, your GST payment that you owe to the CRA, your payroll amount owing to the CRA, and other taxes for your corporation. And then another thing that you're gonna see is the equity on the balance sheet. So that would be the investment, the retained earnings, and a shareholder loan. So those are the three main things that you see on the balance sheet.
So now that I understand what a balance sheet is, Tony, what's the number one mistake that business owners make when they look at their balance sheet?
So it ties in with the question you had earlier regarding the P&L statement. So a lot of business owner think that at the bottom line, let's say they make $10,000, for example, they would think they would have extra $10,000 in their checking accounts or whatever the case would be. But that's not always true. So let's say you make a $10,000 profit. On the balance sheet, it would actually show you if that's what you actually have at the end of the month. So just because you make $10,000, you still have to pay for your liabilities. So that doesn't show on a P&L statement. So you would have to pay for your credit cards. You have to pay for your business loans if you have one or more than one. And then you would have your shareholder loan draws. So that would be what the business owner take out on a monthly basis. And at the end of the month, that $10,000 would pay for all that liabilities at the end of the month. Then your checking account may only show $1,000 or $2,000. And then the business owner asked me, hey, like I have $10,000 profit, but it only show an extra $1,000 or $2,000. Then at that point, I would explain to them, hey, $10,000, you use it to pay off the debt that you have, you pay yourself. And at the end of the month, it only show even though it's only show $1,000 or $2,000 in the corporate bank account, it will still be a positive cash flow just because you are able to take care of all your liabilities without going to the negative. So even though it's only $1,000 or $2,000, it's showing that your business is healthy.
That's great. I can see that would be a huge misunderstanding for a lot of business owners. They're like, I sold a $10,000 job. Why don't I have $10,000 that I can just put in my pocket?
That's right. So that explains it on how the cash flow statement works as well.
Excellent. Another question is, how do the profit and loss and balance sheets work together?
So this is a big takeaway. The profit and loss is showing the business performance, how much money the business is making, how profitable it is. And then the balance sheet shows you your cash flow. So is the business cash flow positive? Even though the business is performing great on a P&L, doesn't necessarily mean that it's performing great on a cash flow standpoint. Just because you make tons of money doesn't mean that you can cover all your expenses, all your liabilities, all your shareholder. So we take a look at both of them together at the same time on a monthly basis to let the business owner know what they can continue to excel on, what they can improve on to make the business work.
Excellent. And is that something that you do for your clients every month, is not just prepare their profit and loss and balance sheets, but go over that with each business owner?
That's right. So at Always Bookkeeping, we look at the financial statements, which is the P&L and the balance sheet on a monthly basis. So we have the meeting booked with them exact same time every month so that they have that slot booked and blocked so that they can meet with me to go over the financial statements. And then for new business owners, so someone that was a sole proprietorship or solopreneur before, they come on to the team with Always. They don't understand it, how to read it. And then for us at Always, we make sure that they understand what they're reading, how the business is performing, just because we know that it's quite stressful to look at all these numbers, and their job isn't to look at the numbers. Their job is to be able to grow the business, and our job is to educate them on how to read them to make the important decision for the business.
That seems like a really valuable service, to have a monthly appointment every single month so that a business owner can understand their finances. That's amazing.
Yeah, that's super advantageous for a business owner to have that service with us.
Excellent. So if a business owner is watching this and they want to start with Always, what's the first step?
So the first step would be going to our website, so www.alwaysbookkeeping.ca, and on there you can book a free first initial consult with one of our team member. So the first hour would be free. That would be for us to understand you as a client, what you need and what we can offer. And then from then on, if you decide to go with our service, then we would start onboarding you. And another way would be to give our office a call. That would be 780-554-8356. Again, you can go on our website at alwaysbookkeeping.ca. Give us a call at 780-554-8356. Or another one would be our email at info@alwaysbookkeeping.ca.
Great. And you've got spots for new clients to start up with you?
Yep, for 2026, we have spots open up. We are expanding. So we have enough capacity to take on clients for 2026. So if you are entrepreneur that don't have a bookkeeper, or if you're just someone that wants to know your numbers on a regular basis, give us a call or give us an email and we'll be more than happy to help you.
Fantastic. So if this video has helped you understand your numbers even a little bit better, please give this video a like and subscribe to the Always Bookkeeping YouTube channel. If you want to actually get help reviewing your financial statements and not just producing them, please book a call with Tony at Always Bookkeeping. And as always, please drop any comments or questions in the comment section below. We'll answer them in a future video. And thanks so much for tuning in. And thanks so much for educating us today, Tony.
Thank you, and see you guys on the next episode.
See you.